Hello, folks. Welcome back. I am back in Chicago for at least 2 days now. Back from San Moritz and happy to be here. The weather's about the same as far as the temperature, but the mountain's not nearly the same. They're made of steel here in Chicago, pretty flat otherwise. Anyway, folks, this is 3 at 3 for the 18th of January, 2022. Welcome. We talk about unusual activity on the show. We talk about it because frequently, as you will see from several examples, this unusual activity results in some very large profits being made. Now, that is not 100% the case. Anybody that tells you otherwise is wrong. I won't say lying, but I will say wrong, because I've not seen a system that is 100% accurate. We believe ours is extremely accurate because we are following the fast money, the smart money, the money that has bought large blocks of options. And as long as we follow along with them, we are taking advantage of whatever intel they have gathered. And we do so with limited risk because I nearly always do so by purchasing options where I have a defined amount of risk when I enter the trade. So with that said, let's take a look at this week, including Activision Blizzard. So we talked about unusual activity in this name when the stock back in December was $61, and they were buying the February 67 calls. Well, as you've already seen, when Microsoft stepped up to buy them today, the stock popped over 90. The screenshot shows you $89 in the pre-market, about 33 minutes before the market started trading. And those 67.50 calls that they were buying for $1.72 or $1.73, obviously worth over $22. And bang, that's one of the reasons we follow the smart money, my friends. It was already up $4 from the time we entered, but it just exploded, obviously, today. Bang. I mentioned this one before as well. This was unusual activity in the IWM. You guys already know that I talked about being in this because of that buying. Started the beginning of the year, first trading day or second trading day, I forget, of the year. They were buying the 213 puts. Those are the ones I bought. Stock or the ETF continued to drop for the Russell 2000. Then they bought the 204 puts at 212. Then they bought the 209 puts. Well, today it traded through 209. It traded down to 208. So a little bit more on the profit side for us. Then Dollar General, told you about it last Friday. Unusual put activity with the stock at 217. We said, does this mean somebody thinks maybe that they're not going to be able to pass on as many of those price jumps that the consumer of a Dollar General store merchandise is probably a lot less likely to be able to stomach much of the pass-through of prices. So does this mean they're going to have to eat more of it at Dollar General and thus less profits? Whatever your reasoning, stock closed 217, as you see there on the screen last Friday. Today, after MLK Day, trades to 208.40. Bang. It's another reason that we trade options. But wait, there's more. Also from Friday, Las Vegas Sands, it was 41.49. They were buying the 46 calls, even on a day when the markets in general are pretty darn negative. We see LVS, Las Vegas Sands, move up from that 41.49 level that I cited when they were starting to buy them to 43.74. So obviously up $2 and call it 25 cents-ish. And we have continued to maintain a bullish stance in this one, but we have taken some nice profits already. Again, Pete always says DDA, discipline dictates action. And that discipline means when we've got winners, we try to take some off the table on a double, on a 2X, and you have to decide where to take your profits. You have to decide where to cut your losses. I generally am cutting my losses on an option trade. I'm emphasizing option trade, not stock. On an option trade that I paid, for instance, $1.20, I would cut it if it doesn't work at somewhere between 60 and 65 cents. I would only lose half of my invested capital. I would not be willing to ride it all the way down, regardless. Now, is there an exception to that rule? Yes. If I'm buying an option for 25, 30 cents, do I need to cut that loss at 15 cents? Perhaps not. And that would be the lone exception. It's not dependent on time. It's more dependent on, okay, if I'm wrong, I'm just going to cut my loss, move on, and say that I believe we're right about 78% of the time, and I want to continue to run and take profits on those, manage those profits with stop losses against the profits, and when I do have losses, I want to be out of them pretty quick. Now let's start with today's fresh action, 3 at 3, starting with GlaxoSmithKline, GSK. So they were buying 4,300 of the 4th of February calls. These are calls that have obviously a little time before they expire, several weeks, in fact. So you need to be aware that they were buying these calls, these February 48 calls with the stock at under 47. So I am a person that likes buying an at-the-money call and selling upside calls against it. Conversely, with puts, I like buying an at-the-money put, selling puts under the market against it. I like doing that because I no longer need to swing for the fences. I no longer need to swing for home runs. Some of you perhaps want to swing for home runs because you like the excitement. I like profits more than excitement right now, folks. I've been doing this for 40 years. If I want to do it for another 40, I want to just make money and swing for batting average, not for home runs. That's the first of today's 3 at 3. The second, Kohl's KSS retailer. Bullish call buying, stock's 51 bucks. They're buying the 52.50 calls. Could you buy the calls against it? Could you buy the 51 calls and sell higher strikes against it? Of course you could. If you do that, you don't incur any additional risk, folks. Now the stock, since we saw this pop this morning, pulled back a little and is presently at 50. So for those of you who would like to buy those March 52.50 calls, you have a lot of time for you to be right. Those options expire on the 18th of March. And you could buy right now the 50 calls for, say, $5. That's where they're trading. And you could be selling the 55 calls for $3. And you'd have slightly better than a one-to-one profit if you did that. Or you could buy the 52.50 calls, paying $4, and sell the 60 calls for about $1.80. If you did that, you would be paying $2.20 for something that could go to $6, which is the way I like to play it. Bang. That's the second of today's 3 at 3. Let's get to a third right now. You remember on halftime last week, I think on Friday, I talked about my disagreement with Josh, Josh Brown, that is, friend of mine, that we burn through that 200-day and that it's Katie bar the door. I don't think so. I think we'll bounce. You see where the 200-day moving average is for the QQQ. QQQ's down, whatever, 2%, let's call it today. And I think that 365 level holds and that we bounce at that level. Now, do we go through it and then bounce? If we go through it and don't hold under it, then I think it's still intact. I don't believe we're going to go through it today, by the way. And then you see various upside targets, if you will, as far as the 100-day, 50-day, and so forth. So that's the way I'm playing it. Guess what? Somebody else is playing it that way too, because at 373.45, somebody bought 15,000 of the February 400 calls. 15,000 is 1.5 million dollars were shares rather equivalent, 1.57 million share equivalent at that 400 strike. Now, does that mean that they think it goes to 400 by February? I don't think so. I think it could like that, but I think overall they're just figuring, okay, these February calls were a relatively cheap shot to play for a bounce. So in other words, somebody with the same sort of outlook that I have right now. Bang. That is the third of today's 3 at 3. As far as signing up for any of our courses, I would encourage you, if you're not a seasoned investor, to start at the beginning, to get our basic options education, stock education, crypto education over at marketrebellion.com/get started. That's marketrebellion.com/get started. If you go over there, you'll see exactly what we've got. You can do remote learning and do it on your schedule. We have many free webinars that are included, some of which are live, all of which are taped, so that you can see them even if you are somebody who's either working or in a different time zone that makes that not as convenient for you. So remember, check out marketrebellion.com/get started. And if you've got questions, well, please shoot them to me at Jon Najarian. I'm back in the States, so at JONNAJARIAN on Twitter. Hey, folks, missed you. I'll be back on the halftime tomorrow. Encourage you guys to tune in for that, and I'll see you then. Bang.